All righty. Hey, everyone.
Hey, happy Wednesday.
Hello.
It's another Water Cooler Wednesday, and we are here for you. So, this is our second episode on taxes. And this time we are honored to have Patrice Stewart from Tax Credit Academy with us so we could talk about all things taxes, right? So we pulled the experts in because
That's right. We got the professionals today. So now y'all get the real deal.
right. We before we told you, we give a disclaimer. We don't know
We're
everything.
not right. We are not the professionals.
So, Treese, you want to go ahead, introduce yourself, give a little bit, tell them who you are.
Tell them who I am, huh?
Yeah.
Hello, everyone. Thank you so much for having me on today, ladies. My name is Patrice L. Stewart, better known as the Realist Tax and Business Strategist. I have over 20 years of experience in the tax, accounting, and banking industry. So I do have my own company, Tax Credit Academy, which I started in 2008 while I worked for corporate America. And once I got let go in 2013, I decided to run this business full time to assist with taxes, business coaching, consulting. Those are some of the same things that we do here at the Tax Credit Academy. So thank you again for having me on.
All right. Thank you.
Awesome.
Right. Thank you for being on. We told y'all we brought the pros, right? 20 years of experience. We ain't got that. Right. Right. So, but
You don't look like you much older than 20. So I don't know.
Thank
I'm
you.
gonna have to see your credentials. What?
Look, Dion knows me. She told me since I was good. Look, she knows.
I know her since she was little, right?
Okay.
All right. Well, Treese, our audience is mostly about people who are thinking about buying a home or selling a home. And so with the people that are thinking about buying, what's the number one thing we want to let these people know?
Oh, okay. So number one thing will be we do not want to write off all of your income, right? Because if you are looking to, so the first thing I should say, the best way to say it is taxes are not going to be the same every single year, right?
Yeah.
And so every single year we have to remember that life changes, right? And so maybe in the last couple of years you were okay with maybe writing some different things off to be able to lower your tax liability, right?
Mm-hmm.
But when you are getting ready to purchase an asset, purchase a home, a building, an investment property, because we know you do a little bit of everything with real estate, right?
Yeah.
You have to be strategic, right? And so you have to learn and understand that what you did before, you cannot always do when you're looking to buy an asset or an investment, right?
Mm-hmm.
So I would say the biggest thing in my industry that I see is people who say they want to purchase a home, but then they go and either prepare themselves or go to someone who prepares the taxes, and they take all of these different write-offs and deductions, right?
Yeah.
And it's not necessarily always sometimes something that they should be taking, right? Let's also add that, right?
Little disclaimer.
Right? In this day and age, we have a lot of people promoting different tax deductions and credits that really do not qualify for everyone.
Yeah.
But the biggest thing is that lowers your income. If you make $85,000 and you allow someone to write off 40,000 or 50,000, now you only made 30,000. but you want to go to Dion and say, hey, I
Right.
want to go look for a $300,000 house. That makes no sense.
Right. Right. And I'm saying, Lisa, why not? Lisa, why they can't? Why they can't? They got a good business. That's what I
And
see.
Lisa over here, like, I don't think you've seen their tax return.
Right. 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 Lisa, like, what do you want me to do? Right.
Right.
I can only do so much. Right.
Exactly.
And that's ultimately, what it is. I feel like today, and even in my industry, I've shared that with some of my preparer friends, like, why aren't you educating your, the community more? Like, I'm okay with getting on and talking like this, live and on my platform. That, that's kind of how I built my name these last 10 years, is getting online and educating, right?
Yeah.
Sharing this type of information with people. And I really wish more people in our industry would do that, because that's what it is. It's the lack of knowledge, right?
Yeah.
It depends who you're going to and what they're looking at. So the beautiful thing with me is, because I'm a tax and business strategist, I had 6.5 years in banking. I've been in accounting and taxes the last 20 years. And then also I'm an entrepreneur that's built my own business. So I have all of these 4 different things wrapped up in one person that you rarely get with a person, with a tax person or a CPA. They may or may not have all of that, right?
Yeah.
So, I'm able to ask those questions to my clients to say, like Dion kind of said, are you looking to purchase a home? Are you looking to purchase property? So we can let them know, this year we have to be very frugal with your tax deductions, right? We can't be aggressive. And I like to tell people that it's a time. Yes, we can be aggressive, but when you're trying to go buy stuff, you do not want to be aggressive with your.
And I think it's really like it would help, even as a person that's interested in buying. This is the time when you start off and you know you're going to go get your taxes done. And we always say start with the lender, right? Even if you come to me, you'll start with the lender, but even start with your tax preparer, right? So to let them know that you're getting ready to purchase a home. And so then they can make sure that they prepare your taxes in the correct manner. So
Exactly.
Yeah.
Exactly.
So Lisa, you got something?
Actually, I do. I didn't know if there might be anything that's new. Because a lot of times in the different tax years, they have changes and stuff that we may need to be aware of. And, maybe people that are either purchasing or even the ones, because we do still keep in contact with our customers after they purchase as well. So for some of the homeowners, are there things that they should be aware of that might be different for this tax season?
For homeowners, kind of specifically as of right now, not necessarily. Like, there's no new tax credit available for them.
Okay.
Like when I purchased my home in 2009, they had that $8,000 tax credit. That was a great incentive, right? I wish they would come back out with something like that, because
hello, where is the love?
I honestly bought my house that year because of that. I had no plan of buying a house. That came out, and like 30 to 45 days later, I bought a house. Literally just because of that $8,000 incentive, right?
Yeah.
So, those of us in the industry have said, we hope. Now, let's be clear, because we do have a new administration, and you all know a lot has been going on. I do expect some things to start coming out this year, especially, with us having, again, it's a lot of entrepreneurs, billionaires in leadership right now. So people also have to understand that America, we are a corporation. We are a business. People like to say we're a country, but we're really not a country. We're a business. And Trump right now is your CEO, right? And that's how we have to think. So if anything that I would say on here to people is, if even when you are in home ownership, think about how you can start a small business. Think about how you can maybe start a home-based business that you can run from your home, because that's what's also going to help you in tax savings, right? A lot of people don't realize when you're a homeowner, the only real deduction that you get right now is you get to write off your taxes that you pay, and you get to write off the mortgage interest. That's it. That's really the only real 2 things that homeowners get, right? And so I like to tell my homeowners, purchase your first home, fine. But when you get into buying your second property, investment property, or whatever, then you may want to think about setting up an LLC, a company, to purchase those properties under, because now you're in a totally different tax write-off and deduction code and bracket, right? Individual taxes and business taxes are two totally different things in this society that we live in. And so the average person who only works a W-2 job and doesn't have a business or a side business has no clue of the advantages that we get. I personally live my whole life through my business. I don't do anything under my personal name anymore.
Okay.
Right. But again, people have to purchase homes and things like that. But I always like to stress that after you buy your first home, then think about, starting a company to purchase your additional properties under. But you could even purchase your property under a business too, possibly. But, that's another topic.
Right.
Yeah.
What about capital gain? I know we have a lot of people that are selling their home and they kind of worry about capital gain.
Right. So the government, let's say the IRS, right? Under the IRS code, when you sell your first home, that's your main dwelling. If you are a single individual, you get to sell that home for up to $250,000 without paying taxes, right?
Okay.
So if you sold the house for $300,000, you would only have to pay on the $50,000 on the $50,000 part. Right. So if you are a married couple and it's the two of you, you get up to $500,000 for your first home. So that's the limit that they give you right now. So anything over that is what you would pay. And it's a form of capital gain, but it's under the it's a term that they have for when you're selling your residential property. But yes, you will pay the taxes on selling that, because that is what they consider an investment asset.
So I have a question to kind of follow up with that. The first one would be, you said your first home. So is that only applicable to when you're purchasing for the first time, or is it that it's your primary residence?
So it has to be your primary residence.
Okay.
So they won't give you that on an investment property. So if it's been your primary residence that you've been living in, then that's the tax break that you would get for the first $250,000.
And then I've heard of something called 1031 exchange, and I don't really know how it works. Is that something that's applicable to a primary residence?
So with the 1031 exchange, I'm gonna be honest, I'm not very well versed in that particular category.
Okay.
I do have we actually just did a workshop like 2 weeks ago, and an attorney was on, and he kind of was explaining things and breaking things down with the 1031 exchange. It is something that people utilize in real estate, but the 1031 exchange did not necessarily go with being with your residential property. This is more for like when you're investing, right? So a lot of investors use that tax strategy because it saves them, right? So anytime you're dealing with like you being the homeowner, this is your personal dwelling. Those kind of tax deductions, like I said, are kind of basic, which is those main two that you get is that, mortgage interest. So the other one, 1031 exchange, kind of goes more with when you're investing property.
Okay. If anybody's on and you have any questions, you can also just ask the questions in the comments and we should be able to see them. So ask any questions if you haven't. Let's see. What about how should the landlords handle rental income on their taxes?
Now, I'm glad that you asked that question, because I actually had shared a video on my, I think it was my TikTok. I put it on there, but I shared how I worked with a client who did not at first want to claim their rental income. And I share with them what a Schedule E is, how you're able to now take depreciation on that building, take different deductions when you have the rental property, because especially if you're paying for lawn care, if you're paying for let's say a property management company, you're paying taxes on that building. You may even still have a mortgage on that building.
Yeah.
All of that now becomes a tax write-off and deduction. And so I'll tell people a lot of times you're actually missing a great tax deduction, right? Because you don't want to claim that income. You don't want to show that you're making 20 to 30,000, but if it costs you $45,000 to run this building, then that's money you're missing, right? And then a lot of people definitely do not depreciate as they should. Now, in real estate, some people consider, oh, should you depreciate? Should you not depreciate? Because at the end, when you end up selling the property, you do end up having to pay a certain percentage back. Off the top of my head, I cannot think of the exact percentage, but just for the sake of the live, let's say you may have to pay about 15%, right? That portion of what of the credits that you've been given over the time. Well, what a lot of people don't understand is in the eyes of the IRS, they're already expecting you to take that depreciation deduction. So even if you get that, it's not like you're saving the money, because they're still going to look at it at the end as if you had already taken the deduction. So, so some people are like, well, should you do depreciation? Should you not do depreciation? Especially when you know you're going to sell the property. Now, if you know you're not going to keep the property for longer than a year or two, then no, don't do depreciation. But if you know you have this building in your family and now it's 15 years in, you just wasted 15 years of not taking a valid tax deduction. That lowered. I had a client who had a building, and because it goes off of your value when you purchase the building and the purchase price of how much they give. You get about 20% that you're able to write off as a depreciation, right? So I had a client that we had $158,000 tax deduction from depreciation.
Wow.
Because they had never taken any over the years. Is that what?
Correct. Because now once they got with me, we looked at the building, we looked at the property, we entered in all of the information that we needed on that depreciation screen, and their tax deduction was that dollar amount.
Oh, wow.
Exactly.
Nice.
Right. Yeah. And let's be clear, that's just the depreciation. That's not including the property management company, the maintenance, the tax. That's not including any of that.
Okay.
You know what I mean? So that's what I'm saying. People have to really look at it. And when you're dealing with these different taxes, and I would say if you have a basic tax return, it's you, your child, and you have a W-2, file that on TurboTax. I tell people that
I was just getting ready to say that.
Come to me for a basic tax return. I'm not one of those H&R Block companies that's trying to get every dollar in the door. Like, I'm going to be honest and tell you up front, you don't even have to pay me because this is a basic return, right? But when we get into people who want to start, maybe getting into home ownership, having other deductions, you have a business, you have multiple properties, you're getting into investing, you don't know what a Schedule E is, which is where we file investment in real estate. That's when it's time to hire a professional, right? That's when it's time to bring in someone who knows and understands these laws, and that can also explain them to you, right?
Yeah.
I don't like when people work with people and they're like, well, I don't know what's on my taxes. How are you allowing them to be filed and the person didn't even go over with you how it got here, So I'm very big with that. No one can come to my office and say that they don't know what's going on with their tax return.
Well, that's a blessing, because you're right. You're absolutely right. A lot of people, I've heard that as a LO, I've heard that. I've had several instances, sometimes elderly people, they have this reverence and respect because they don't, one, let's be honest and lay the hay where the horses can get to it. Everybody's scared of the IRS. Don't nobody want to have no problems with the IRS. So when it comes to getting their taxes done, a lot of times people just trust what the tax professional says, you know what I mean? And they don't ask questions. A lot of times they really don't. And I agree with you. I think that you should. And it's awesome to have somebody like you who's willing to educate and give the information that people need. But you're right. A lot of times they don't ask the questions. I've had people that was like, you had all these deductions for your business. They like, what business? You didn't know. You didn't know that you had a business on your tax return? No,
Yes,
I didn't. What kind of business? What?
all the
Yeah.
time. All the time.
And then you actually take it and show it to them on the Schedule C. They had no idea what a Schedule C was. Like they really,
They really
Right.
are dumbfounded. They are.
Yeah.
They're
yeah,
baffled. But I
This,
have to tell them, you probably were someone who said you wanted a bigger return, right? And you
mhm.
didn't ask how they got that bigger return. You just was like, "Oh, you got me $8,000 back." But all the time they put a whole business on you, and you
they
didn't
put a
even know.
whole
You didn't even know you
business
was a
on it.
barber. You didn't even
Yeah.
know you was a hairstylist. You didn't even know you was a nail tech. Girl, this is like
Exactly.
Lisa. We see the same thing. Girl, they come to me. I'm like, girl, how did you not know you were a nail tech? Like,
Exactly.
but yes,
That we laughing, but it's serious.
it
It,
is.
it
It's
really
serious.
does happen. It really
Yes,
does
Right.
happen.
it
So
happens too often.
Mm.
yes.
Yeah.
It was,
I do have another question that I was thinking about, because like a lot of times I'll tell people, because as a LO, we sometimes have discount points on the mortgage transaction, to get the rate down, stuff like that. So my understanding is that if they itemize, they can use those discount points as part of their deduction to decrease their tax liability on a primary home. Does it also work that way for an investor when they're doing a purchase? I don't know how that part works.
So no, the investors cannot use the itemized sheet. So the itemized sheet is only for the homeowner, right? A single
Mhm.
individual, not married or head of household homeowner. Let's just say that.
Yeah.
Um, and then also they have changed a lot, Lisa, with the itemized deduction, which you've probably seen in the last couple of years. So they've taken a lot off of itemized. It's not even a whole lot left on the Schedule A that you
Oh,
can
wow.
actually itemize. They took like 15 to 16 different items off like 4 years ago. So a lot of things that you used to be able to itemize, you can no longer do.
Mhm.
I think the main ones that are left now is you do still have like charity, you do
Yeah.
have your medical expenses and copays that are over 20% of what your normal copay is already, right? It has to be more than what you're already allowed.
Okay.
Um, then you still have if they're claiming their home, their mortgage interest gets claimed on that Schedule A, and
Mhm.
then it's like two other buckets, and then that's it. We
Wow.
used to have like 20 to 23 different items that you could itemize,
mm,
like your
Yeah.
education, unreimbursed employer
Business expenses.
expenses,
Yes. Mhm.
all of that.
I was real mad when they took that one off.
Yeah, a lot of us were. But let me say this: it actually was when the first round when Trump was in office. But
Yeah.
what I will say, to me, overall, it kind of rounded out because he also increased the standard deductions.
Mhm.
Even though itemized deductions went away, I think more people kind of took the standard deduction versus itemized. So
Mhm.
itemized, they like double, almost tripled those deductions. So it kind of, and I think for the industry, it people who were more in those kind of uniform, real estate, that may have more affected some of the people with
Mhm.
itemizing, which is probably why some investors have decided to go over and do it more under the company. Like I said, once you buy your first
Yeah.
home, but once
yeah.
you start doing the investing, you want to set up that LLC because it gives you a whole other type of tax write-off and deductions under the business tax code versus the individual tax
Awesome.
code.
Okay. Sounds good.
Okay. Yeah. Yeah. All right. Probably last question, maybe. What documents should the homeowner kind of keep and save for the tax season?
Um, Document wise, well, you definitely need your 1098 statement that you get from the mortgage holder, the 1098T.
Mhm.
Um, and then if you have your tax bill, most people do also upload their tax bill to show. Sometimes it shows on the mortgage statement as well, the payout.
Mhm.
Um, because again, for the individual homeowner, those are the main two things that they're able to write off. Like if you upgrade your home or you redo your kitchen, you can't write that off. right? You can't write
Okay.
the IRS looks at it as you upgraded your home, but you'll get that when you sell it. Right. So if you spend 15,000 on your kitchen, you're hoping that you're gonna get an additional maybe 20, 30,000 on the sale of your home, right? So that's how they look at it. But that's why again I said you want to maybe look at starting a business, even if it's a home-based business, because under the eyes of the business, right? If I have a LLC, I'm able to then write off certain things with that rehab. I'm able to write off my contractors. I'm able to write off my material, right? So it's kind of a shift in your thinking, as I like to say to my individuals. And that's what I did when I purchased my family house back. I didn't purchase it as an individual. I set up a property management company, and I bought it under the property management company because I knew that I was going to have to rehab the home. So this is why I say too, you want to make sure that you're working with a tax and business strategist like myself, because what we're going to do is we're going to strategize business wise what that looks like and tax wise what that looks like for benefits. If I purchased that property under my personal name, I could not have written off that rehab. You know what I mean? So me seeing that if you know you got a property that you need to do work in, it may make more sense for you to set up the LLC. You could still purchase the home under your personal name with Lisa, and then get with me afterwards, and you can transfer that over, quick claim deed it, set up a trust. It's all different kind of ways that we could structure it to now where you're able to take advantage of the business tax code, especially when you have to spend that type of money. You spending 10, 20, $30,000 on a property. To me, I want my money back. I don't want to just it on the property. I want the tax deduction that they give the entrepreneur. So I'm not mad at Trump and them. I just learned to get like them. I learned to read the tax code and utilize the same exact strategies that he uses. People just think because they're rich. No, we have the right to use those same tax strategies. Yeah. That's the beautiful thing with taxes. It's no color, right? There's no color to it. You just got to understand the game, put a strategy in place, and move how you start seeing some of these people who have money and have assets and how they're doing it. It's legal. It's nothing illegal about it because it's in our tax code.
In the tax code,
you just have to learn the tax code or work with someone who knows the tax code.
Okay. All right.
Well, that was a mouthful.
I hear you. Right.
Miss Dion, I know this is your friend, but Patrice, I just made you my friend too. So I want you to come back. You came for her today, but you're gonna have to come for me another time, okay?
I'm available, ladies. Like, this is my passion. Like, for real, getting on and talking, letting as many people know as possible what it is. Because I feel like a lot of times we're so emotional with things and we're not looking at how the system is, right? Yeah. And let's utilize the system to benefit us. You could be mad, but let's get this money at the same time. Okay.
Hello. Right. So, all right, everybody. If you need Tax Credit Academy, this is Patrice Stewart. This is her phone number. She can definitely help you and assist you and point you in the right direction. All right.
Thank you.
And as you know, if you're starting to buy a home, you got to start with the lender first. So
come to Lisa with those. Lisa,
that's right.
Exactly. Lisa don't want to hear him, so you need to go with treats first and get it right. Because what I want to do is I want to get you into that $300,000 home, and I don't want Lisa to tell me that we can only afford 180. So there ain't nothing out here today.
You ain't lying.
So we want to thank you guys for joining us. We're so excited. We're here every Wednesday at 6 p.m.
All right. Good night, everybody.
Good night.
My fingers look so weird.